Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, this is the third video of hire purchase system, and in the previous video we saw the format as well as the accounts that we need to prepare and also the scenarios in which the questions may come in your exams. And if you haven't watched that video, then please go watch that video first. Otherwise, solving this problem would be a difficulty for you. Alright, so I will put the link in the description below of that previous video, so watch that first. Now in this video I'm going to solve this simple problem of hire purchase. Here's the question. The cash price of the machine bought by hire purchaser on 1/4/2016 under HPS under hire purchase system was 7,45,000. So here it is said a person purchased a machine under hire purchase system. So if anybody is purchasing anything under hire purchase system, then he automatically becomes hire purchaser. Alright, at a price of 7,45,000. This is the cash price. Alright, 7,45,000. Then they have said on signing the agreement, rupees 2 lakh was to be paid. So 2 lakh is being paid on signing the agreement. That means in the beginning. So it is down payment. This is called down payment, an advance. Alright, it is made on the spot. So this is down payment, and then they have said and balance in 3 installments of rupees 2 lakh each at the end of each year. Now after paying this down payment, whatever outstanding is left, that would be paid in 3 installments. Okay, 3 installments annually every year of rupees 2 lakh each at the end of each year. Then they have also given us the interest rate. 5% interest was charged by hire vendor per annum. So interest is given, and also the cash price is given, and also the installments are given. So this question is based on the first scenario where all 3 are given, isn't it? This question is based on first scenario. See, installment is given, rate of interest, as well as the cash price is given. Alright. Now one more thing you need to identify is whether the interest is included in the installment or interest is not included in the installment. I told you, right, in the last video, this is the most important thing that you need to identify to solve the problem correctly. What I told you, to identify, you have to compare the cash price and the total of down payment and all the installments. You have to compare. If it is equal to cash price, if the down payment and all installment total is equal to cash price, then interest is not included in the installment. That is case 2. And if down payment and all installment total exceeds cash price, then it is called interest is included in the installment. So you can easily identify this. See, let's compare. See here, cash price is 7,45,000. Yes, cash price is 7,45,000. And how much is the down payment? Down payment is 2 lakh. So 2 lakh plus the installment total. How many installment? 3 installments of 2 lakh. So 2 lakh into 3, that is 6 lakhs. So 6 lakh plus 8 lakh. Yeah, total of down payment and all the installments is 8 lakh, isn't it? Is 8 lakh. See, I have prepared here. Down payment 2 lakh and all installment total is 6 lakh. Add these two, you got 8 lakh. So compare it with the cash price, 7,45,000. Of course, this is more. This is exceeding the cash price. So you can easily understand that here there is interest already included. Interest is included in installment. I told you, in cash price it is pure principal amount. There is no interest in it. But here in installment there will always be interest. Okay. So this is more than the cash price, so you can easily understand interest is included in the installment. If these two were equal, then interest is not included. Okay, that is the case 2. We will solve that problem in the next video. Now you understood, right? Interest is included in the installment. You just have to compare the cash price with the total of down payment and all the installment total. If this is equal, then that is case 2, and if this exceeds the cash price, then that is case 1. Interest is included in the installment. So here interest is included in the installment, and we will solve this problem easily now. Okay, all right, let's solve this. Now let's solve this problem. First, we have to prepare this working note, this table for the calculation of principal and interest. See, here's the question. Here what happened, a person hire purchaser bought a machine from hire vendor at a price of 7,45,000 and he didn't pay on the spot, but he did pay a payment of rupees 2 lakh on the spot in the beginning on 1st April 2016 when he bought that machine. And that payment is called, I told you that payment is called down payment, right? So first we have to take this down payment which is made in the beginning on the 1st April, okay, purchase date. So let's take that on 1st April 2016, 2 lakh installment. We'll take it in the installment column. It's like an installment only. So 2 lakh installment, but in this amount there is no interest because no time has been passed. It is on the 1st April itself on the purchase date. So no time has been passed, so no interest. So down payment would not include any sort of interest. So entire amount would go to principal, 2 lakh. And then the cash price of the machine is 7,45,000. So you have to take that over here, 7,45,000, and then you have to deduct it with the principal amount, that is 2 lakh. So 7,45,000 minus 2 lakh, which is equal to 5,45,000. Okay, 5,45,000. And then you have to go to at the end of this year, okay, 2016-17. This was April, this is 31st March. All right. So at the end of the year, an installment became due of 2 lakh. Yes, of 2 lakh. So we have to take that installment of 2 lakh. Now there would be interest. A year has been passed. So how to calculate the interest? Interest will always be calculated on outstanding cash price. How much is outstanding? On that you have to calculate the interest. On 2 lakh, okay, most of the students make this mistake. They directly calculate 5% on 2 lakh. No, you don't have to do that. You have to calculate the interest on this amount, this. Okay, so 5,45,000 into 5%, that is equal to 27,250. So the interest is 27,250. And then you have to calculate the principal amount. How to calculate principal amount? You see, it is very simple. You just have to deduct these two. Okay, deduct these two, and then you will get principal amount. 2 lakh minus 27,250. 2 lakh minus 27,250, which is equal to 1,72,750. 1,72,750 would be the principal amount. Then this principal amount has to be deducted from the outstanding cash price. Now how much is outstanding? Outstanding is 5,45,000. Yes, so you have to take that 5,45,000 minus 1,72,750, right? So let's calculate that. 545 minus 172,750, that is equal to 3,72,250. all right, and then you have to go to next year, that is 2018. At the end of 2018, again installment became due of 2 lakh. So you have to take that 2 lakh. They said 3 installment, right? So 1 2 3. Okay, so 3 installment. I'll directly write it over here to 2 lakh. So 2 lakh installment became due, and then you have to calculate the interest. Same procedure, calculate the interest on the outstanding cash price. 3,72,250 into 5%, that is equal to 18,612. 18,600 and okay, it is 0.5 is there, right? So you have to round it off to 13. Okay, 18,613. Then find out the principal amount. Same thing, you have to deduct installment and interest. So 2 lakh minus 18,613, that is equal to 181,387. 181,387. This is the principal amount, and then again take the cash price, outstanding cash price 3,72,250, and deduct it with the principal amount 181,387, which is equal to, let's calculate, 372,250 minus 181,387, 1,90,863. okay, 190,863. So this is the outstanding cash price. And then in the next year, in the year of 2019, again 2 lakh installment became due. Now 1,90,863, directly you have to take it. This is the last second, right? so you have to take it over here. This is the last year and this is the last second, so you have to directly take it into the principal column. 1,90,863. Okay, then you have to calculate the interest directly. You don't have to calculate the interest, no percentages. You just have to subtract principal amount with the installment amount. Okay, so 2 lakh minus 1,90,863 will give you 9,137. So 9,137 would be the interest. See, at the last year you don't have to directly calculate the interest. You have to take the last outstanding cash price, last second outstanding cash price, directly into the principal amount, and then deduct this with the installment. Okay, deduct this with the installment and you will get interest. Alright, this is how you need to calculate the last interest. Don't calculate. If you calculate, then it would be wrong. Okay, do like this. And then you have to deduct the principal with the outstanding cash price. Outstanding is 1,90,863 minus 1,90,863. See, it is becoming nil now because entire amount has been paid, so nothing is left. It is nil. Alright, so this is how you do the calculation of interest, principal and outstanding cash price. Simple, right? It's very simple. Down payment doesn't have any interest, and then from the next years there will be interest. You have to calculate the interest on the outstanding cash prices and then deduct it with installment. You will get principal, and then deduct the principal from the outstanding cash price. You would get the next outstanding cash price. This is how you do this table. And at last, finally, you have to calculate the depreciation. And one thing is very important to note over here is that there would not be any depreciation over here because this is 1st April. This is the day when you purchase the machine, the day when hire purchaser purchase the machine. So no interest, sorry, no depreciation. Okay, no depreciation because the asset is not being put to use. No time has been passed, so no depreciation. After a year has been passed, then you will charge the depreciation. And here the rate is given in the question. The rate is 10% and the method is reducing balance method. The question, it depends upon the question. Okay, sometimes the question may also give straight line method, but mostly they will give reducing balance method. So now here it is reducing balance method. We will do that. See, always depreciation is calculated upon the cost of the asset. Yes, and what is the cost of the asset over here? The cash price of the asset is 7,45,000. Yes, he bought the machine for 7,45,000. 7,45,000. So 7,45,000. On this amount you have to calculate the depreciation. 10%, right? So it will be equal to 74,500. Since this is written down value method or diminishing balance method or reducing balance method, what you need to do, you need to find out the written down value. Yeah, so take that 7,45,000 minus the depreciation, subtract the depreciation, then you will get the written down value method, that is 6,70,500. Okay, into 10%. Now on this amount you have to calculate the next year depreciation. Okay, which would be equal to, see, it would be equal to 67,050. And then again you have to deduct this depreciation from this written down value to find out next written down value. Okay, 6,70,500 minus this 67,050, which is equal to 6,03,450. Okay, then on this again depreciation, so it would be equal to 60,345. This is the last depreciation you have to charge because our payments are over. So this is the last depreciation you have to charge over here and show. So you understood, right? First we'll take the cash price of the asset and calculate the depreciation, and then subtract the depreciation from this value to find out the next written down value, and then subtract the depreciation from this to find out the next written down value, and then charge the depreciation. So it is very simple. We are doing this depreciation since 11th standard, so it is really simple. And then you have to total this. Okay, so the installment total is 2 lakh, 2 lakh, 2 lakh, so that is 8 lakh. Yes, that is 8 lakh, and the interest total is 27,250 plus 18,613 plus 9,137, which is equal to 55,000. And then principal amount, the principal amount is 7,45,000. Okay, 7,45,000. The principal amount is 7,45,000. So this much. So here you see 7,45,000 plus 55,000 is equal to 8 lakh. So the answer is correct. The solution which you do, you have to verify it at last by adding all these columns. You can easily verify your answer. Alright, so this is how you prepare the working note for the calculation of principal and interest. Now let's do the ledger accounts and see how to prepare them. Okay, alright. Now after the calculation of principal and interest, we need to prepare the ledger accounts. Ledger accounts in the books of hire purchaser. And the first account that we need to prepare is the asset account, or you can also call it as machinery account. And the rule to prepare this account is very simple. Whenever asset increases, we have to debit, and whenever asset decreases, we have to credit, right? Under hire purchase system, what we do, we purchase the asset part by part by making the installment. So keep that in mind, all right? So we are going to make the purchase postings every year because we are purchasing the asset every year. We are making the payments for the asset every year, all right? And to prepare the asset account, you have to keep the focus on these two columns, on principal and depreciation. These two columns are very important over here to prepare this asset account. See, at first what happened, at first the down payment was made of 2 lakh to acquire this asset. So the down payment is made to hire vendor, and due to that down payment, asset increased, asset came into the business, or asset came to the hire purchases. So asset is coming in. So asset is coming in, that means asset is increasing. So asset debit. It's like purchase of an asset. So how? Because of payment made to hire vendor. So to hire vendor account 2 lakh. And the same thing again happened. The installment which was made, the installment of 2 lakh after deducting the interest, 1,72,750. So only principal amount will come in the asset account. See, to hire vendor account 1,72,750. See, this is the payment made against this asset. So it was made on 31st 3 and this was done on 1st April. And this is in the same year, alright? This is in the 1st April, first day when the down payment was made, and this at the end of the year. It is said in the question, right? The installments will be paid at the end of the year. And then the depreciation was charged at the end of the year. That was 74,500. So because of depreciation, the value of asset will decrease, isn't it? The value of asset will decrease. So asset will decrease, so credit because of depreciation by depreciation account 74,500. Simple, right? And the sum of these two was 3,72,750 and depreciation is 74,500. So whatever the difference, whatever the balance will come over here by balance carried down. Okay, by balance C by D, that was 2,98,250. And then this balance would be the opening balance of the next year. See, to balance B by D, 2,98,000, 2,98,000. This would be the opening balance of the next year. And the same thing you have to repeat in the year of 2018 at the end. Again the installment was paid and the principal amount came to be 1,81,387, and that will come over here to hire vendor account. This is also a payment made for the asset. So 1,81,387. Yes, we are purchasing the asset part by part. So the payment is made to hire vendor account, only the principal amount, alright? 1,81,387. And then again the depreciation was charged of 67,050 rupees. So it will come over here because asset is decreasing. The same way asset is decreasing because of depreciation, so by depreciation account 67,050. And then again the sum of these two came to be 4,79,637, and then you need to balance this year, and the balance came out to be 4,12,587. all right, and the same thing you have to repeat. You have to make this closing balance as opening balance of next year to balance B by D, 4,12,4,12. yes, and then again a payment was made in the year of 2019. At the end of 2019, that was 1,90,863. so it will come over here to hire vendor account 1,90,863. simple. And then again the depreciation was charged, the depreciation of 60,345. yeah, 60,345. so depreciation will come over here because asset is decreasing because of depreciation, so depreciation will come over here. And then you have to balance this year too, and the sum of these two came out to be 6,03,450, and then the balance came out to be, by subtracting this and this, the balance came out to be 5,43,105. so this is how you prepare the asset account. Simple, right? Asset is increasing because of the payment made to higher vendor. So the higher vendor is coming over here, and you have to carry forward the balances. You have to carry forward the balances. And after the completion of the last installment, you don't have to prepare anymore. See, 2019 is the last year over here. That is why I stopped at 2019, because all the payments of the higher vendor has been completed. So this is how you have to prepare the asset account. Simple, right? All right, now we have to prepare the higher vendor account. Okay, all right. Now, after preparing the asset account, the second account that we need to prepare is the higher vendor account. Now, who is higher vendor? Higher vendor is the person who sold the machinery to higher purchaser under higher purchase system. Now, higher purchaser has to pay to higher vendor under installment basis, right? He has to pay to higher vendor. So now higher vendor is creditor to higher purchaser. He is creditor to higher purchaser. So this is liability account. Higher vendor account is a liability account. So to prepare a liability account, what we do, whenever the liability increases, we credit, and whenever the liability decreases, we debit. Yes, that is the rule of preparing the liability account. Now let's start this higher vendor account. At first, what happened? At first, on the 1st April 2016, a down payment was made to higher vendor. Yes, a down payment was made of 2 lakh to higher vendor. Now tell me, when you pay the liability, a portion of liability, then what happens? Will the liability increase or decrease? Will it increase or decrease when you pay the liability? Of course, when you pay the liability, of course the liability will decrease, isn't it? Yes. So here also the same thing is happening. 2 lakh is being paid to higher vendor and the liability is being decreased. So come to debit side, and it is decreasing because of cash. Cash is being paid to higher vendor. So to cash account 2 lakh, 1st April 2016, that is down payment to cash account 2 lakh. Simple, right? And then in this, the entire amount was the principal amount, so it will come by asset account 2 lakh. Entire was principal amount, yes, so it will come by asset account 2 lakh. This is also the cross postings, okay? Cross posting from here, see, to higher vendor account 2 lakh. Entire principal amount, right? 2 lakh, because of in down payment there is no interest, so entire thing will come over here by asset account 2 lakh. And then what happened at the end of this 2016-17 year, at the end of the year 31st March 2017, another installment was paid of 2 lakh, which also included interest of 27,250. all right, keep that in mind. So installment and interest. So in installment, interest is already included, so 2 lakh you have to take. So when this 2 lakh is paid, higher vendor account will decrease. Of course it will decrease because the liability is being paid, so the liability will decrease. So come to debit side, it is decreasing because of the cash payment, so to cash account 2 lakh. Simple, right? Entire installment amount you have to take it on the debit side, okay? To cash account 2 lakh. And in this there is principal amount as well as interest, so you have to take that by asset account. You have to show the principal amount. See, 1,72,750 was the principal amount, so you have to show that. And then you also have to show the by interest account 27,250. see, 27,250. Simple. And then what happened in the next year, in the year of 31st March 2018, second year, in the second year another 2 lakh was paid to the higher vendor, so the liability is decreasing and the interest of 18,613 is included in this installment, so you have to take that. Higher vendor liability is decreasing by 2 lakh, so take it on the debit side to cash account 2 lakh. all right, and in this there is a principal amount of 1,81,387 and interest of 18,613. These are also the cross postings, okay? Asset account are the cross posting. You can see over here. Here see 1,81,387, 1,81,387. Simple, right? And the interest 18,613. And then what happened in the year of 2019? In the year of 2019, another 2 lakh was paid to higher vendor. Another 2 lakh was paid to higher vendor, which included the interest of 9,137. So this payment, due to this payment also the higher vendor account, the liability account decreased, so take it on the debit side. Because of cash it decreased, cash payment to cash account 2 lakh. all right, and in this amount there was principal amount of 1,90,863 and interest of 9,137. see, interest 9,137. so see, this is also the cross posting to higher vendor account 1,90,863. So you have to take it on the credit side over here by asset account. So here it was an asset account, right? So you have to take it here in the higher vendor account by the name of asset. So this is how you need to prepare the hire vendor account. To prepare the hire vendor account, you just have to see whether it is increasing or decreasing. It will always decrease, all right? It will not increase. It will always decrease because we are making the payments to hire vendor. So debit, 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 cash accounts. You can also take bank accounts, okay, depending upon your choice. So this is how you prepare the hire vendor account. Now next account we need to prepare is the interest and depreciation account, all right? Okay. Now after preparing the hire vendor account, the third account that we need to prepare is the interest account in the books of hire purchaser. Now what is interest to hire purchaser? Hire purchaser has to pay the interest to hire vendor. So this interest is an expense for hire purchaser. He has to pay the interest. So interest is an expense for hire purchaser. So this is an expense account. So when expense increases, we debit, and when expense decreases, we credit. That is the rule of accounting, yes? So interest increases, you have to debit. Interest decreases, you have to credit, because this is an expense account. Now on the first day when the down payment was made, there was no interest, yes, but at the end of the year, when 1 year had been passed, interest was generated of 27,250 and it was paid to hire vendor. It was paid to hire vendor. So interest increased, yes, it increased by 27,250. So debit, all right, interest account debit because of the payment made to hire vendor. To hire vendor account 27,250. Simple, right? You getting right? To hire vendor, interest account debit to hire vendor account. That is the journal entry. Leave the journal entry, directly to the ledger. Interest account to hire vendor account 27,250. And then since this is a nominal account, you have to transfer the end balance, the closing balance, to the profit and loss account. So at the end of the year, the balance would be transferred to by profit and loss account, to the profit and loss account 27,250. all right? This is how you need to prepare the interest account. You just have to see if it is increasing, debit; if it is decreasing, credit. Then in the year of 2018, at the end of year 2018, again 18,613 interest was generated and it was paid to hire vendor. So again the same thing you have to repeat. 31/3/2018 to hire vendor account. Interest increased because the payment was made to hire vendor, 18,613, and then the balance has to be transferred to profit and loss account. Same thing in the 2019. In the 2019, 9,137 interest was generated, so that interest increased. So debit because of hire vendor, it was paid to hire vendor, so to hire vendor account 9,137, and at the end, since this is a nominal account, you have to transfer the balance to the profit and loss account, 9,137. Simple. This is how you need to prepare the interest account. It is very simple. You just directly have to take hire vendor, hire vendor, hire vendor, because interest is being paid to hire vendor and then the balances are transferred to profit and loss account. So this way you can easily prepare the interest account. You don't have to see the journal entries. If you go on seeing the journal entries, then it will take a long time. So directly you need to do this. All right, if it is increasing, debit, 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 and then transfer the balances. That's it. All right, easy, right? Okay, now let's see the depreciation account. Now after preparing the interest account, the last account that you need to prepare is the depreciation account. Now what is depreciation? How do you prepare the depreciation account? See, it is very simple. Depreciation means fall in the value of asset, so it is a loss. Depreciation is a loss, so when loss increases you have to debit, and when loss decreases you have to credit. All right, so let's start. See, at the end of the first year, what happened? At the end of the first year, in the year of 2017, 74,500 depreciation was generated. So depreciation increased by 74,500 because of the fall in the value of asset. So depreciation increased, debit, because of the fall in the value of asset. So to asset account 74,500. See, this is how you have to make the posting. Depreciation account debit because it is increasing, depreciation is increasing, loss is increasing, and then the asset is decreasing. So to asset account, because of asset, depreciation is increasing. So to asset account 74,500, and then transfer this balance to the profit and loss account because this is a nominal account, same like interest account. So at the end of the year, the balance would be transferred to profit and loss account. By profit and loss, 74,500. So you have to repeat this every year. See, in the year of 2018, what happened? In the year of 2018, 67,050 rupees depreciation was increased. It was generated. So again the depreciation is increasing, So debit, depreciation account debit, because of the fall in the value of asset 67,050. 2018 to asset account 67,050 rupees, and at the end of the year balance has to be transferred to the profit and loss account 67,050. Simple. And then tally, and then at the end 2019, what happened in 2019? 60,345 depreciation was generated, so that depreciation also increased here. So debit, because of the fall in the value of asset, to asset account 60,345. See, depreciation is increasing because of the fall in the value of asset, and then the balance has to be transferred to profit and loss account. It is very simple. Just the depreciation is increasing, loss is increasing, you have to debit depreciation to asset, to asset, to asset. All right, so this is how you need to prepare the depreciation account.